it's kind of the sad day of our times where the whole world stops and here's what like one guy says that like him and his council of like elders are going to do with the price of money, and it has global implications, not just U.S. implications. But that's a state of where we kind of find ourselves in this like very analog, manual, monetary world. So it's actually kind of a funny contrast to like the automated global open network of Bitcoin. But yeah, so it's, so far no surprises. When there's too much supply relative to demand, but usually not for good reasons. It's kind of the similar reason why oil, the futures contracts, went negative in April 2020, because you suddenly had a big shutdown of demand, of lockdowns, and that oil is still flowing, and so you kind of run out of space to put it. And we kind of can see that in some markets like this. And so basically what's happening there is as you add more variable power sources to the grid, because we have solar, we have wind, we have things like that, but we don't have great storage. Batteries have been around since the 1800s, and the progress on them is pretty slow. It's very hard to make a cost-effective, energy-dense, affordable battery, especially at a utility scale. You can use batteries for like shutting power down and very briefly and then going on to a different power source. They're good for like that brief bridging, but it's hard to like store energy at utility scale for like days and then deploy it when you need it. And so as you add more variable power sources, you have this thing where during the middle of a day, for example, all the solar panels are giving tons of power, and whereas the peak demand is often like late afternoon, like kind of evening, when people are coming home and stuff. And so you often have a mismatch between supply and demand. And so the problem there is you have stranded energy that just gets wasted. I mean, you're generating power kind of involuntarily at the wrong time, and so it just gets dissipated. And obviously, Bitcoin miners have made use of this, right? Bitcoin miners are kind of specialists at going around and finding stranded energy, right? So there's good synergy there. But outside of really, really flexible loads like that, it's really hard to use that energy. And it's also part of the kind of the narrative out there of what is the actual cost of solar and wind. They often say that solar is like the cheapest energy source. It's like, well, sure, it's the cheapest energy source at midday, but the question is, how do you get that power into the grid on a ongoing basis, because it's often cheap exactly when you don't want it, and then it's not available when you want it. And so negative energy pricing is actually kind of a problem that comes up. And the better way to look at it is, what is the average cost of power on that grid, and what is the uptime of that grid? So I think there's a mismatch between perceptions and reality about where some of the technology is in terms of different energy sources, right? So something like 3/4 of global energy comes from hydrocarbons, and then the rest, hydro and nuclear are big chunks, and only something like 5% is wind and solar. But as wind and solar have kind of been pushed to be larger and larger parts of the grid, and there are certainly applications where they're useful. There's very hot and dry regions of the world. Rooftop solar can give you kind of more autonomy from the local grid if you have, say, rooftop solar and a battery backup, for example. So, but as they've kind of put policies ahead of technology, and you kind of like obfuscate the costs, overstate the strengths, and get that into the grid, it's kind of caused some issues. There's also a challenge where there's not a lot of investment in the grid itself, right? So for example, California keeps having their electrical grid, parts of the electrical grid face rolling brownouts, and you can imagine if you were to say 10x the number of electrical vehicles that are drawing power from that grid instead of through the gasoline distribution system we have, right? That's all now, if that starts going over the grid, that's more stress on the grid. You need more copper, you need more redundancy, you need more cables bringing that around. And so I think the short-term way out of this is, frankly, just there needs to be more supply of hydrocarbons, natural gas, oil, and coal, because that's what the world's currently short of, especially in certain locations. Longer term, I'd like to see a nuclear renaissance, combination of smaller reactors and a better regulatory environment could really make nuclear come back. I mean, decades ago, it was actually pretty cheap and quick to build a nuclear plant. As there have been a handful of accidents, which, there's actually, even if you add up all those accidents, the number of, even if you take the worst case scenario of not just immediate deaths, which was very, very few, but if you kind of take the high end estimates for, environmental damage and what that could have caused, kind of in the region, it's like it killed fewer people than coal kills, like, every year, for example, through particulates in the air. But nuclear got that kind of increasing regulatory burden, and that now makes it almost impossible in many places of the world to build a new nuclear facility. And of course, you want like safe operation. So for example, part of why Chernobyl was so bad is they didn't even have like the shield that now is standard practice among the nuclear facilities. And so there's really bad ways to build a nuclear facility, but the modern ways and back then even the responsible ways can build safe nuclear. And so I'd like to see that combination of they've developed small modular reactors. That's been a big like a push lately. And if there were kind of easing regulatory environment, I think that nuclear can at least solve a lot of the baseload grid power. And then longer term, there's interesting things like ocean thermal energy that I think is underexplored. There are other ways to get baseload power, but the general thing you need is that you need to have nature do as much of the storage and concentration as possible, because the more that you have to replicate with machines, the less efficient and energy dense that's going to be. And so I think that's the big theme that a lot of people are missing in the energy space. There's been some flip-flopping in Europe. So first they did not embrace it. Then they said maybe we shouldn't close down these power plants. And you see a little bit different response in each country. And also nuclear is not perfect. I mean, even in France where they have a ton of nuclear energy, they had an issue where because of a drought, nuclear needs a lot of water for cooling. And so their rivers were quite low. And so a lot of their nuclear facilities ran into cooling issues. And so it's not even necessarily a silver bullet, but it is something that I think most countries should have as a larger part of their grid. And I think it's going to take time and pain, both for that and for another round of hydrocarbon exploration and production, which I think makes a lot of people uncomfortable. But there are just people in the world that are relying on it for their their life. And so I think it's going to take time. I think narratives change. So, for example, inflation hit, the idea was transitory. And then when it stuck around, the narrative changed to it's greedy corporations, it's Putin, it's, XYZ. I think you're going to see a similar thing in energy where, it's like it hits, problems in Europe especially, but elsewhere. And some of the politicians will say things like, this is why we need more wind and solar. And it's like, well, okay, give it a couple more years then. And then as this keeps grinding on, I think more and more people get dissatisfied with the current situation. They do some of their own research and they say, wait a minute, this is not working. And so over time you can change. But I think it's got to go through pain. And also regions that don't embrace it, regions that are slow to figure out their energy situation, are going to become less economically and politically relevant in this kind of Game of Thrones of geopolitics. And so it's somewhat self-correcting. If one country, wants to decommission its nuclear and another one wants to build a bunch of it, that's probably going to affect their future economic, prowess. And so I think it takes time. I think it takes learning. And again, I mean, a lot of these technologies can be applied in interesting ways. I think the big problem is not the technology itself in many cases. It's when the narrative around the technology is wrong or overstated, or you're trying to put the wrong type of energy source in the wrong area for the wrong reasons. I think that's where you get problems. Probably as long as I had job security. So that's the thing. So there's career risk where, the downside of something can make someone not do it, whereas the upside makes them do it. So for example, why was MicroStrategy the one that kind of went all in on Bitcoin? And it's like, well, Saylor has a very large stake of the equity and the voting rights, and so he's able to operate that almost like a small business. Whereas if you have one of those big companies where the CEO owns like 0.25% of the shares, and he's kind of optimizing for quarter by quarter results and something like that, it's hard to make decisions that go against certain narratives or optics. But I do think that a shrewd energy company now should be looking into Bitcoin miners, especially in this time of stress, because I think the way this is going is we're going to see more and more integration between just energy producers and Bitcoin miners, right? Because the cheapest energy is energy that you produce yourself and then it's stranded or like surplus and you don't know what to do with it. And so you can just you always have your own buyer, your own way to monetize stranded energy. And so I think that it's smart to get ahead of that. So I think the halving matters over time, obviously, but I don't think the timing is super useful for the specific kind of bottoms and tops of those big markets. I think liquidity is a much closer variable. I've done a lot of analysis on this. So if you look at PMI cycles, so Purchasing Managers Index, it's kind of a measure. If I look at one macro chart for a country, I want to look at its PMI, which is, Purchasing Managers Index. If it's rising, it means the economic growth rate is accelerating, and if it's falling, it means it's decelerating. And if it goes below 50, it means it's probably outright contracting. And so economies go through these ebbs and flows. And generally, Bitcoin does very good in rising PMI environments, and most risk-on, quote-unquote risk-on type of assets do well or better in the rising PMI environments, whereas Bitcoin generally does historically pretty poorly in falling PMI environments, and generally the types of investments that do well there are defensive types of equities that are less economically exposed. But then when you dig in deeper, you find that liquidity corresponds heavily to PMI. And Bitcoin is even more closely associated with liquidity. And one simple way to measure that is to look at global M2, or let's say M2 of the top 5 countries, for example. Kind of pick your sample, but basically a large section of global M2, which is broad money supply, and then you denominate that in dollars. And if you chart that in rate of change terms, like year-over-year percent change, and you run that next to Bitcoin, especially in year-over-year percent of change terms, you'll see pretty strong correlation. So basically, Bitcoin has not been acting as a hedge against quote-unquote inflation like CPI, but it actually is a very, very strong hedge against global growth of broad money supply in dollar terms, and then it does poorly when that is decelerating, or especially when it's negative year-over-year. And that makes sense because that's kind of a liquidity driver for everything. And what determines that, there's two main variables to determine that. One is how much money printing is happening among the major powers, and then also how strong is the dollar relative to other currencies, because when you denominate all of that in dollars, if the dollar is stronger, you can get flat M2, even if most M2s are still kind of going up. But if you put it in dollars and the dollar went up say 10-15% that year, you could get a flat figure, and that's generally a bearish environment for Bitcoin. And so I generally find that to be the strongest correlation, that when money supply is growing, when liquidity is abundant, generally Bitcoin does well, pretty strong correlation. And then when that's all tightening and pulling back, that's when Bitcoin tends to struggle.